warm welcome to today's webinar. My name is Barbara. I'm the CEO at thinkstep-anz, and it's my pleasure to host today's webinar with Alison Chan from Metrics. Alison is Investment Director, Sustainable Finance, and Frida Panai is Associate Director, Sustainable Finance. Before we get into it, I just want to go back to when did our journey start with Alison and Frida? I think it was 2021. It was still pretty much the middle of COVID when we had an email coming in, can you help us with? And it was a whole shopping list. And we said, let's just get started with one thing. And it was really great to work with Alison and the whole team. I think, Frida, you hadn't joined back then. I joined a little bit later. And it was really very much about this maturity curve, what we call moving on from, I don't think it was ever at the compliance stage. It was already market driven. You already had a few things in place, moving up to really now, I would say, being in the leading stage. And I won't steal your thunder, but you really have made great progress. And it started off with just running a few SDG workshops to really get the whole team on board. And I think that is so important. So great, congratulations for taking that first step. We looked at materiality assessment, what really is important, moving on to scope 3, then target setting. And all along the way, you kept it going to keep your staff involved. So I think that's a really good way of going about it. Scope 3, why would we worry about it? Quite often we get the question, oh, it's actually not our emission, it's someone else's emissions. But is this hedge my hedge or my neighbor's hedge? It's pretty much exactly on the border. I think we both own half of it. They want it trimmed, we want it trimmed. So we just pool our resources and work together. And that is how we need to tackle scope 3 emissions. It's joint ownership of those emissions, and only both ends of the ownership can actually work together and trim them. Both need to account for them. And that's my little why scope 3 are important, because quite a few will also internally have the question, oh, why do we need to scope 3? So it's because of that joint ownership. And then within scope 3, of course, all the emissions are important. In some cases, like if you're a financial institution, some are more important than others. And we will hear all about that from Alison and Frida in a moment. Over to you. Thanks again for joining us. And I'm very curious to hear about your journey. And thanks for sharing it.
Thanks very much, Barbara. And thanks for reminding me that we've been working together for 4 years now. It's gone quickly and it's gone slowly at the same time. And I think probably everybody on this call can understand that these things don't go necessarily to plan, but it's been great to have you beside us on the way. Just quick point before we get into it, that this is not an opera of finance. My compliance team would require me to say that. We're here to share with you some of our experience in measuring our emissions, and it's not an opera of finance. So a little bit about us. We're in the business of connecting capital. So we are an asset manager ranging from large institutions to retail investors, entrusting their funds to us. And we deploy that capital into the market, into the real economy, businesses in all kinds of industries. And in particular, for the purpose of our financed emissions, which we will go into later on, we have a strong investment focus on commercial real estate, project finance, and loans to businesses. We have a team of 170 people, and that's certainly grown a lot since we started work with you, Barbara, back in 2021. I think we were 70 people back then. And we have offices here in Australia and also in New Zealand, which is also relevant, of course, to our emissions footprint. And I think maybe something else that will resonate with most of the people joining today is that we're a private company. So we don't necessarily have those drivers to publish our emissions the way that the public companies might through stakeholder pressure. So today I will cover the early stages of our journey, the why, the who, and the what of our approach to emissions measurement. And Frida will cover how we did it and how we hold ourselves accountable. So, if most of the people on the webinar today are already measuring their emissions, then I think that you already will appreciate most of the why. For us, when we started on this journey, the why was already a given. It's good business and it's the right thing to do. So for an asset manager on the operations side, we wanted to be able to align our operations with our values. We wanted to appeal more to our current and potential employees. We wanted to reduce the risk in what we do and meet those upcoming legal obligations. And then the side benefit of that is to demonstrate leadership amongst our peers and build our reputation for that leadership. On the investment side, it was important to us to align our investments with what our investors were valuing and talking to us about. And that would help us to attract more capital from them. It would also help us find new opportunities in sectors to invest, where emerging technologies, for example, might be one. It would prepare us for mandatory reporting requirements, which both will apply to us directly, but also indirectly as our investors demand more from us in order for them to meet their requirements. It also has that sort of soft edge focus on building our relationships, both with our investors and the companies in which we invest. And it's always surprising when we talk to our clients about emissions that you think you might be imposing on them, but once you get them started, they really love talking about the work that they've done and the opportunities that they can see in their business to do even more. Thanks very much, Frida. So if we then turn to who's been doing the work in metrics, Barbara mentioned that our sustainable finance team was formed in 2021. And back then there were just two of us. And I joined with a background in principally banking and finance law. And the other person who was in the team was a banker, so used to making investment decisions. So the two of us didn't really know where to start. So we did a bit of a survey of our peers to see what they were doing, and quickly learned that we would A, need help, and B, need a materiality assessment. And so we did reach out to a few different sources to find that help. So we created some internal working groups for some of the initiatives we wanted to focus on. We also took advantage of some of our member organisations, and in our context, that might be the Australian Sustainable Finance Institute or the Responsible Investment Association or the Investor Group on Climate Change. But every industry, of course, has their own member bodies, and they offer really good opportunities to join working groups, and they hold workshops and training. So we found that valuable. And then the third limb of our who is external resources, and that comprise consultants such as ThinkStep, who've been really valuable to us, and also some non-profit partners who help us deliver initiatives, for example, in the reconciliation space. So if we look specifically at resourcing our climate commitments, we wanted to really leverage both internal expertise and external expertise. And when we went to consultants, we were deliberately looking for people who could develop things from first principles, because it doesn't seem that long ago, but in emissions measurement terms, it was an eon ago, 2021, and not many people had measured financed emissions. And so we spoke to a few people who said they could do it, but it was pretty clear that they hadn't done it before, and I wasn't sure that they would be able to do it. And when we were talking with Barbara, sort of her experience, particularly coming with the work that she's done in Europe, it was clear that ThinkStep would have the tools to do something for the first time if it needed to be done for the first time. And we thought that there would be some wheels that would need to be invented. And we can touch on that a little bit later on as well. So, but one of the other things we really wanted was somebody who would not be looking necessarily to just have this constant stream of work, but would be willing to teach us how to fish, because we wanted to be able to manage our own destiny and manipulate data and all kinds of things which you can only do if you actually understand what's being done completely. So since then, I'm pleased to say we have built our team. We now have a sustainable finance team of 4, and Frida and the other members of the team joined the team with previous experience in carbon accounting and all of us are now accredited by PCAF. And so we do have the expertise on board that we need to be able to operate the framework and the models that ThinkStep helped us set up in those early days. So if we just rewind a second, how did we get to the point where climate was important? I guess we always knew that climate would be one of the answers to come out of our materiality assessment, but we did go through the process to find out what else would be material to our investors and to our team and to our business. So we did engage ThinkStep, and it was important to us to have third party run this process because we thought it would open up our stakeholders. And they conducted 15 stakeholder interviews to identify a list of issues. And from there, we then surveyed over 100 stakeholders to help us rank those issues. And that process in itself was a really valuable opportunity to engage with our stakeholders and also focus our own business on where the sustainability risks and opportunities lie for us. And so quick overview of the sort of categories of issues that came up for us. And of course, every business and industry will be different. But in particular, to think about climate, you'll see that climate was important for us because it would help us mitigate risk and optimize the risk-adjusted returns we can offer our investors. It would offer us the opportunity to align what we're doing with global standards, which would help us future-proof our business. Of course, we're all coming up to face mandatory climate reporting. And finally, and in the meantime, offer a competitive advantage. And I think that we've made efforts to stay ahead of our peers in sort of the emissions measurement and target setting process. And, that's something that's like sweeping water uphill. You've just got to keep at it. But we found it to be really rewarding. So I will hand over to Frida to let you give you a bit more detail on the how.
Thanks, Alison. So I will just briefly touch on the frameworks we use to measure our emissions and some of the challenges we've also been facing in that space, and then talk about a bit about accountability and transparency. So as Barbara and Alison have pointed out, I joined Metrics a bit later on. So at that point, ThinkStep was already engaged and they had wrapped up the first inventory for Metrics, which was for 2021, the baseline year, and they had also assisted with target setting. Metrics, I dare say, is quite ambitious, and our leadership is quite ambitious when it comes to climate. So these are the targets that we have set. They are focusing on the operational side and our Scope 3 emissions, which is our portfolio emissions. And I will touch on the level of materiality of these emissions, because as you can imagine, a business like Metrics, the vast majority of our footprint sits in Scope 3 and specifically in our portfolio of financed emissions. So more specifically, I wasn't surprised to see that, of course, the greenhouse gas protocol was used for our operational emissions when ThinkStep was preparing this inventory. We continue to do so, of course. And for our Scope 3 emissions that are not operational, so not thinking about travel data and commuting and so on, specifically as it relates to our portfolio, we are using the PCAF standard. And I was very pleasantly surprised to be interviewing at Metrics at the time and knowing that they were the first signatory of the standard here in Australia. It was quite ahead of its time, if I'm honest, because in the consulting space where I was working with a lot of the bigger players in this market, people had just started thinking about their financed emissions and starting their reporting journey, and Metrics was already measuring emissions in 2021. And of course, for target setting, these were done using the SBTI target framework, which offers a science-based approach to target setting. So we can have that reliability and provide that assurance that we are not just coming up with numbers and targets. They are based on these reputable frameworks. So in terms of the emissions measuring process, as most of you know, there's different sources of information and we have to work with different departments when gathering this type of data. On the operational side of things, we mostly rely on actual data from invoices, travel data and activity, but in some cases we do use estimates. Our big focus is our portfolio emissions. So we spend a bit more time developing that data set and making sure that we have all the checks in place. We work very closely with our finance team, and then on the portfolio side with originations and the portfolio risk teams. There's a lot of data points that come into play with these calculations, so we try to work as closely as possible and give a heads up to these teams that these are the data points we need from them, this is why we need them, and how we're going to use the information. In terms of the calculation itself, again, we're using the greenhouse gas protocol, and specifically the PCAF standard applies for 3 of our asset classes, so business loans and illicit equity, project finance, and commercial real estate. Our emissions factors are a combination of sources. So we use the PCAF database for some of them. We use other sources like the national accounts factors, and thinkstep has actually helped us develop some of the emission sources for commercial real estate, because we were able to get that information from government statistics and make it more granular and specific for our needs. So our exposure is in Australia predominantly and New Zealand. So thinkstep was able to help us build out emissions factors by state and type of asset. So we might be dealing with office spaces or hotels or so on. That granular detail was not available in the PCAF database. And because it's quite an important asset class for us, we thought we'll get that support and get the emissions factors that would make sense for us. thinkstep was involved in developing the first inventory. Since I joined, we've taken that process in-house, and thinkstep has since been involved in reviewing the outcomes of the inventory, providing any feedback and data and assurance, not specific assurances in terms of an opinion, but it's more of ease of mind for us to know that another set of eyes has looked at this. At the time that I first joined, I was the preparer of the inventory, so it was very useful to have thinkstep on board. Since then, as Alison has pointed out, we have grown by adding 2 more members to our team. So that comes into play when we're thinking about data quality and assurance. It's really helpful to have those additional resources so we can have our additional reviews internally before we go to thinkstep. Earlier on, Alison had touched on the materiality assessment itself and the topics that have come up. We just want to touch briefly on the actions we've taken since to address these topics. I appreciate this is a conversation about climate change, emissions measurements, and target setting, but you will see some initiatives like diversity and inclusion in there. It's just one of the topics that has come up. But briefly, we've, of course, started by understanding our footprint, where our major sources of emissions lie. We've set our targets and joined the ANZAM initiative. We continuously try to build capacity in our team and the broader team at Metrics. So we've all been PCAF accredited in sustainable finance, and we've also helped with the development of 2 courses, short courses with UTS, and we roll that out specific teams in our organization, mostly the finance and originations and portfolio teams. We are very active in terms of collaborating and participating in external organizations. So we're members of PRI, the Global Compact, RIA, and so on. And where we have the ability, we do try and contribute in consultations or by being members of various working groups that these entities have. I will touch on our reporting later on a bit, but if you go on our website, you'll see a number of reports. We have, of course, our climate report, and we have other relevant documents like our modern slavery statement. In terms of engagement, we engage on the policy, government and industry level, but we also engage with our borrowers on a one-on-one basis. So as promised, this is just a snapshot of our emissions profile. not much to report on scope 1. We don't really have gas or diesel usage in our offices or operations. Our major exposure is, as you would see, category 1, purchased goods and services. And I will then move on to finance emissions, and you'll see how vastly different those numbers are. So this is a profile of our emissions footprint over the past 4 years. Some of the positive things for us is that the quality of the data has been improved. And for those of you that are not familiar with PCAF, the standard gives you a scale from 1 to 5 to indicate what the data quality is that we're working with. So a top score would mean that the data is provided by investee and it's externally assured. The worst case scenario is you're using estimates on a revenue or an asset level basis. So we try as much as possible to replace estimates with actuals, but as you might understand, it's very hard when it's third parties you're relying on to get data. So ideally, with the regulations that are coming into play in Australia, we'll start seeing more and more companies actually measuring their emissions and getting assurance over those. Again, we can see a slight improvement in our temperature score that is linked to the adoption of more science-based targets by our investees. So in terms of accountability, I will just briefly mention some of the issues we had, which is obviously gaps in the standards themselves, but also the data. So for example, PCAF covers a certain number of asset classes. Others are not captured by that. So for example, we are able to, at the moment, measure the emissions of about 77% of our portfolio. And of course, we have the limitations of having the actual data. We are seeing improvements year on year, but we hope to see more of that going forward. To also try and improve on that, we've been trying to develop a pilot program to help some of the investees measure their emissions. So that's work in progress, but that's how we're trying to tackle that issue for now. Timeliness of data is another issue that we have been dealing with and have to deal with a bit more as regulations come in Australia. As you might understand, we can easily or relatively easily get our scope 1 and 2 data in check quite quickly. You just need your invoices for the year. Scope 3 is a bit more challenging, especially when you're relying on third-party data. If some of you are relying on supplier data, or like us, if we're relying on investee data, if they're all reporting in the same period as you, especially if you have the same financial year end, it takes time for those other organizations to collect the data, review it, get it assured and published, and you have to naturally wait for that if you want to have the actual data set. In terms of engagement internally, again, as a lot of you would have experienced, there's a lot of teams typically involved in gathering sustainability data. It is a challenge sometimes to engage with the teams. They all have their own priorities and endless list of tasks. What we try to do is be very transparent internally and say, these are our obligations. These are the data points we need. This is the period of time we will need to get access to that data. How can we work with you to make sure that we get the data in a timely manner? Is it easier to get our invoices, for example, on a monthly basis, so you don't have to rush to collect them all at the end of the year, and so on. I have been threatening people with incoming assurance requirements. So in order to deal with any internal data issues, I've always been prepping people by telling them that sooner rather than later, we'll probably need to get assurance of our data. And the auditors will be knocking on your door for walkthroughs and more information and checks and sample tests of the data you've provided. So please, let's work together to make sure that the data we collect internally is of the best quality possible. And as mentioned before, we do have 2 more team members now, so that makes life a bit easier because we can have someone that prepares the inventory and someone that actually reviews it in more detail. We have more capacity for variance analysis and so on. So that has improved our processes a lot. And just briefly, this is our current public reporting suite. We have our climate report, a stewardship report, modern slavery statements as a reporting entity under the Act, both on our website and also the Australian Border Force Register. We are PRI and Global Compact signatory, and we do report annually under these two commitments. And I think that was it from our side.
Thank you so much, Frida and Alison. Quite a remarkable journey, really, to see from where you started, having quite a few awards being mentioned, doing very comprehensive reporting. So congratulations. And it's been a real pleasure working with you. Pretty much as an extended team, we feel like that with you. So thank you for sharing that today. We do have a couple of questions already. And the first question is, how are you determining how well you are tracking against your SBTI targets, and at what frequency do you evaluate this? I think you might have answered some of that, but maybe...
Yeah, so I mean, our target is a portfolio temperature score, and some of those graphs that Frida put up that show the trajectory that we're on. How frequently do we run that analysis? It's generally annually, but we did have the need to transition because mandatory climate reporting in Australia will be based on financial year, and we had previously been reporting on calendar year. So we did have a 6-month period recently.
Thank you. There is one other question. That is, do you use a purpose-built greenhouse gas accounting platform? If so, which one?
No, we don't use a platform, so all calculations are done in-house. To be honest, our operational emissions, the spreadsheet is quite simple. It's not a very data-heavy document. And for the finance emissions, there's a bit more work involved in that. But again, we do it all in-house. We do all the checks in-house. I think something that Alison pointed out was that was what was communicated to ThinkStep when initially engaged, that Metrics wanted to know how to do this so we can go ahead and not rely on any service providers. So that's what we have been doing since.
Thank you. Another question, this time from Corinne. Where is the projected temperature score sourced from? Is that an internal tool?
That is a SBTI tool, and it's not that user-friendly, if I'm honest. It is open source.
I would agree.
You need to have some kind of computer science degree just to be able to use it, because it's in code. It's not a nice program to use, but you can find it through the SBTI website.
Yeah.
Yes, that's correct. So we use 2 templates that are in Excel that SBTI provides, where you have to put all your portfolio information and the target information for the borrowers. And then that information then gets uploaded in an SBTI tool that requires Python knowledge to run it. So once we have the spreadsheets populated with the work that we do, we go to our IT team and let them sort the Python bit out.
There was a very last question. Have the New Zealand climate reports from last year proven useful for you to source data from? I'm not entirely sure what New Zealand climate reports Corinne is referring to. So
we're not a reporting entity in New Zealand yet. We do have operations in New Zealand. So we've been reporting in line with TCFD / the proposed Australian standards. We have looked at some peers, what they've been doing, but our primary reference points, the regulations to which we'll be subject.
And New Zealand borrowers, I think a few of them seem to actually have started measuring emissions, which is helpful for us because that feeds into our portfolio emissions, our finance emissions.
I did notice a couple of our borrowers had signed up to today's webinar, so I hope that offers them a little bit more insight on why we've been talking to all of our borrowers about encouraging them to measure their emissions and set science-based targets. It's something that we've been focused on for the last couple of years.
excellent. And I think that is why we are also doing those webinars, to help you share the journey, to get others on the journey as well. Corinne just confirmed she was referring to the reports issued by New Zealand investees for their financed emissions. So really useful.
Yes, in that case, absolutely. We look to those reports. As Frida was talking to you about data quality, so anybody who's published their emissions, and even better if they've got some assurance in those published emissions, that is the data that we use and is really useful to us.
Yeah, and because if I may add, when you don't have actual data, you have to obviously use estimates. And the factors that we rely on for PCAF, we find them quite conservative. So it can give you a very inflated number, but that's the best you can do. So we've noticed a few cases where we've gone from an estimate to a reported number, and the reported number is makes more sense for the entity. So that helps us have like an actual view of what the consumption is for each borrower.
Thank you. We'll end it here. We've gone over a little bit, but it's been a really useful conversation. Thanks for answering all the questions. Thanks for sharing your journey. I'm sure it's very useful for a lot of our listeners. And to everyone else out there, if you do have other topics that you'd like us to cover in a webinar, do drop us an email and we'll have more webinars coming. With that, I wish everyone a wonderful afternoon. Thank you again, Alison and Frida, and looking forward to seeing you very soon in person.
Thank
you.
See you soon.
We have many more webinar replays on a whole host of sustainability topics. You can check them out on our website and our YouTube channel.